Mark, there's a number of big questions we don't know the answers to. We don't know whether the US is going to get involved. We don't know what kind of escalation we're going to be seeing. We don't know what the Fed's going to do a little bit later on. Is today just a day for sitting on your hands? Do you have a clear sense of direction?
I think we're just waiting to the Fed in the short term. And I think this Fed meeting is really interesting in the short term and for day traders. I think there will be quite a bit of short-term volatility around that, even though by next week we'll completely have forgotten about it and ignoring it. It has no long-term consequences because of the uncertainty, not just around the Middle East, but also the uncertainty around trade policy and what happens on the fiscal package. So anything the Fed says today only has a short shelf life, but it'll have a big impact in the short term. How is that likely to play out? I'm hearing a lot of people talk about the fact that the risk reward is to play for a dovish surprise, given the soft CPI prints recently and some of the slight weakness we're seeing at the margin of the jobs market in terms of initial claims. And then that's because what's priced in the market is that you only lose a little bit if they're hawkish, whereas you can gain a lot more if they are dovish. Even though I get the risk-reward argument, I think the Fed, if anything, will surprise hawkishly today. I think that there's a chance they only have one rate cut priced in the dot plots. But the fact is, you know what, the labour market, because of what's happening on the immigration side in the US, will stay tight. Even if there's a reduction in jobs being added or even jobs lost in the coming months, it's still going to be tightness in the labour market. On the flip side, while inflation has been soft, we haven't seen the full pass-through yet from tariffs. And therefore, Powell will point to that inflationary impact. And of course, we've got the oil spike as well. So I'm expecting the base case is that there any surprise today, it'll be that they'll be hawkish. But I admit that there's not much to be gained in that trade. Therefore, the risk reward's not great.
But Mark, where do you focus for the signalling out of the Fed today? Because, of course, Chair Powell's not going to want to give much away. The Wall Street Journal kind of dismissing the dot plot. What do you focus on?
I think the dot plot in the short term is relevant. I understand dismissing it because the longer term issues, as I said, will be out of date soon. But today it will definitely make an impact what the dot plot says. And of course, in the press conference, he's going to be asked some kind of questions. If there's two priced, does that mean that it's going to go as soon as July, or does that mean that there's going to be 50 basis points in September? And I think either way that answer is interesting. If he explicitly says, yeah, July is absolutely in the cards, it'll be interesting. If he explicitly dismisses, that'll be interesting. If he says, if he opens the path to 50 basis points or kind of tries to rule that out, it'll be interesting. So I think that the presser will be very, very interesting. And yes, I accept the dot plot is going to be pointless by next Monday, but it'll not be pointless in the short-term session today.
Mark, I'm putting you on the spot. The other top story we're following this morning is a potential decrease in capital requirements when it comes to Treasury holdings and what the risk ratios look like there. Is that a tradable piece of legislation?
It's been long flagged. This story is, of course, it's another planned story. It's kind of reaffirming something that's been expected for a long period of time. It is another marginal positive for the stock market, a stock market that is kind of drifting higher until we get the next big news. And I think that next big news will ultimately be a negative catalyst. So, yeah, it's short-term positive, but not a hard catalyst.